Now, if I had $1 million right now in my bank account, would I be buying a property? Now, maybe you're viewing this because you really have $1 million. You're looking, or you've been pitched to buy, a new condo or something. Today, I have a case study for you. Let's look at Avenue South together. I think it's a great case study, and for myself, I actually stay quite near there. It's a beautiful project. Well done, UOL in any case. So today, let me try to answer some questions. Why have some people made money in properties, big amounts, and yet don't really know what kind of returns that were being calculated in? Why property agents are so bullish that people can make a lot of money, and why, like for example myself, I think it's not that easy to make, although there's certain circumstance, if it's favorable, you can actually do make big amounts in property. For myself, I actually bought my property in 2017, my second property. If you followed my journey, I've actually shared it very openly. I saw an uptrend because there was a lot of activity in en bloc, but that was a couple of years back. Right now, will I be doing the same? You're going to get the answers for it. So let's dive on to things. So over here, what I would like to get our story started. Follow me on this journey. We're going to uncover some numbers. I actually did a lot of homework in preparation for this video. So if you can walk away from this video with a learning thing or two, you are definitely a lot more savvy when it comes to pictures. You're definitely a lot more savvy as to knowing some of the risks when it comes to property investment. Now let's look at some of the numbers. Transaction history. I went to dig around. If you look at Propertyguru, you can actually see transaction history. And what you realize actually is the Propertyguru's transaction history actually doesn't seem very complete. I'm not too sure why. But when I look at Avenue South Residences, transaction history was very thin. So I actually went to dig out at 99.co, and you see a huge list of past transactions, and that gives a very complete picture. Because I want to answer the first thing. Is that, do developers actually raise the price? Because that's a common thing. When you go to a launch the first day, developer always tell you they're going to raise price in phase 2, phase 3. Is that true? I'll try to answer it, but again, this is a one-off case study. The sample size is very thin. So if you look at 3-bedroom today, now by the way, if I had a $1 million, or if you have $1 million, you can actually buy a 3-bedroom, 2.25 million very easily, because you can actually use leverage. That is true. You follow me on this journey, you understand the numbers a lot better. So assuming you're aiming for a 3-bedroom, and then what you realize is there are past transactions, because this property started selling in 2019, Avenue South Residences. Go and check it out. All accurate data, but I filtered down for you. I've actually picked up same block, same square feet, roughly the same height. If you are not familiar with property pricing when it comes to developers, every floor they kind of raise like $5,000. It's thereabouts. So you'll see that I have 3 sample sizes for you. Of course, they are not exact same floor, but I think it's not too bad as a discussion point. The first one, 5th of October 2019, that transaction was at 2.175 million, correct? Level 20. Same, on August 2020, I put another sample 8-10 months down the road, till 2.208 million. Now that means that if you factor in the floor difference, probably it's actually the same price there. But also 2020 was a bad year, there's COVID-19, that was still at some of the worst periods. It's quite expected that they haven't raised prices. Then I have a latest number to show, which is on 30th floor, 2.25 million transaction costs. If we add in a few levels, 5,000 each, maybe the developers inched up the price by a bit. Or maybe they have sold out some units already, and then they are willing to raise prices because they are more confident right now. So I think my exercise with this also shows developer may not raise prices in the subsequent phases. So dispel that myth. I think on my own, while I did this research, I'm convinced, so hopefully this data is useful for you. Then what we realize also is we try to guess the total number of transactions. If you look at 99.co, you can see the number of transactions. I count 35 pages. I did some simple math for you already. I think the total number of transactions is close to 700. And then they have about 1,000 units, correct, for this project, Avenue South Residences. So if we kind of figure where things are, UOL probably still has 30% unsold, total unsold. So there is still quite a bit of supply that they are trying to push out, which means they are, when they are towards the later stage, they might inch up prices, but as of now, they probably still have to keep moving units. Because again, developers have a limited time frame to sell. So they are needing to sell, so they cannot hold on to it forever. Because what we want to understand today is if you have $1 million, if I had $1 million, can I actually buy this property? Actually, it's yes. I'm not 40 years old, but I just put an arbitrary number because some of the viewers, like yourself, if you do have $1 million, you're probably not that young. I've done a lot of private clients feedback. I've got to know a lot of you guys through this channel, I do know my target range in terms of audience also. So let's put a number to things, and you realize that if you are age 40, for example, you have $1 million, 2.25 million property, you buy this property, 3-bedroom Avenue South, your initial down payment is still a build-up phase, correct? So your initial down payment is 20%. If you don't know these details, good, you're on this journey, you're learning something. So your total, use these tools, these are available, and then you realize that there is option to purchase 5%, sales and purchase agreement 15%. Sales and purchase agreement comes a bit down the road, down the number of months. Let property agents advise you on that. I'm not a super expert on that. But I also want to draw attention to BSD. This basic stamp duty, right? This is assuming you only own, you don't have property. Yeah? If you have additional buyer stamp duty, your equation already flawed. Do not buy with additional buyer stamp duty. I had so many questions on this channel. I cannot get equation that fits. So only buyer stamp duty can be tolerated, possibly. Now, 20% means that you still have remaining 5%, and that's at completion. Then you take a progressive loan, and that's what you can see, progressive payments. Now, what we are going to realize next is if you are to take a loan of 1.6875 million, you realize that how much loan are you going to repay per month? If you're age 40, you can take 25-year loans to age 65. You realize that your per month loan basis is actually quite heavy. It's actually at 6,514. I did input some assumptions. 1.2% interest rate cost. Now the equation is easier because of 1.2% interest cost. So also be very wary of where our assumptions are. Only $6,514, and I've also even prepared for you an amortization scale. If our assumption is correct, if I buy this property, I have $1 million, I buy this property, 3-bedroom, and I'm going to down pay this 524.6K right now today. I sign an agreement. On the project, so 8 years down the road, can I sell this property? I actually came up with this 8-year thing because it fits the narration, how we're going to explain things a bit better. But 8 years is seemingly still quite a long investment time frame. You may be thinking of investing for properties for a long period. Maybe 8 years really is something you thought of before also. So now let's move on. You realize that why I chose 8 years is one thing. This is actually the SRX chart. And you realize also that in this chart, what I want to share with you is that if you had looked at this index is not the percentage gain. Again, it's referenced now 199 on the index, and on January 2013, you'd see that it's actually a much lower place at only at 178. So at 178 points to 199 points, that is a jump, that is a growth, correct, of about 11.8% gain in terms of the resale rental index. Again, this resale index is not new sales, but it kind of gives you an indication what kind of potential returns. That was actually the peak, January 2013. I have a previous video with Vina actually, and she's actually sold out, if I'm not wrong, from 2013, some properties. I don't know details of it. And some audience, some comments actually say, hey, maybe she missed out on a subsequent rally. But if you look at the index carefully, there was clearly a peak then. And selling at that point actually is a very smart move. So timing in the property portion, timing is also pretty important as you realize in this journey with me. Now, if we move forward a bit further, what I'm trying to explain to you is the kind of growth is total 11.8%, right? That if I calculated correctly, is compounded annual growth rate of 1.3% only. Compounded annual growth rates, which means per annum return. Also, don't take the number. We have to look at it per year basis for 8 years. Now, just in case you bought, timing was bad. Now the index is a bit higher. Good for you. And then that will be the first basis as to how I give you numbers in a while's time. Then the next part, which is a more optimistic projection, what I want to show is, hey, at the base of September 2016, that was where markets have been flat for years, correct? That at that point of time, the index was at 162. If we compare 162 to a growth of 199 on the index, that is quite a good gain. That would have been a gain of 22.2% and a compounded annual growth rate of 4.6%. That is fantastic timing. So myself, I bought it in third quarter 2017 after I realized a lot of en bloc activity. So I actually convinced my wife we should start moving in already. So at that point of time, what I'm circling for you is where I actually entered my second property. So again, timing is something we can't get it to perfection. But also today's case study, if your compounded annual growth rate is 1.3%, how does it look like? Second part, if your compounded annual growth rate is slightly more optimistic, we don't say 4.6%, which is what you bought at the real bottom. That is too beautiful to be true. If we say somewhere in between 1.3 and 4.6, if we use 3% as assumption, what are numbers going to be? If you're interested, continue watching. Now, if you're benefited here, smash your like button so that more people can see valuable content like this. And again, invite you to press on subscribe. Along the way, I will be launching ideas on property. Although I'm not a property agent, property is something that I think is fundamental to anybody's wealth building process. So I see wealth in totality while I do financial planning. So let's give things more perspective. If I had $1 million, or if you had $1 million, you buy this property, 2.25 million, and then there's appreciation of 1.3% compounded annual growth rate, correct? Now it's a built-up project, TOP in 2023, Avenue South. So what it means is 8 years time, which we think ahead 2029, you realize that if we put in that growth factor, your sales proceeds should be about $2.495 million. That is compounded annual growth rate of 1.3%. You can sell it at 2.495. Now 2.495, we have to adjust to get your rate of return, because your question for me today, or our case studies, will I be investing that 1 million like that? So what we have to measure it again is what our current loan balance is, correct? Because when you sell property, you have to pay off the loan first, remaining you get it as cash. The numbers, I've actually done the heavy lifting for you already. If we box up correctly over here, our outstanding balance in 2029 is $1.137377. And if we net off that amount, we realize that our amount that we can collect back is actually about $1.357551 million. Now, numbers are all very big. I do understand that. But when we want to do big wealth building, these are some numbers. Just get used to it. If you're someone younger, follow through, because it opens up your mindset, your horizon. So if we have to factor in, try to get rate of return, we have to understand our capital. Our capital initially is 25%, correct? Our capital initially also had to factor in basic stamp duty. Then some couples right now, they have decoupling, so they have to pay costs to remove away the previous property and stuff. That is even not factored into the equation, so do keep that in mind. If you're just nice first time property, single, buying for yourself, and you followed the tutorial to here. Then next, we have to factor in how much in terms of mortgage we have actually repaid. Just like I mentioned, $6,514, and we times it for 8 years. Total payments back to bank, we have actually made $625,344. Now net, you took back this amount, 1.357 million. You have to pay off capital, you have to pay off your bank, correct? So net, your gains, what is your real gain? $95,107. Wow, the numbers are big to read also. Trying my best. Hopefully you benefited. Smash a like again if you haven't done so already. So what we need to adjust is also for certain possibilities of getting rent. Because if we look 95,000, while 95,000 is big, you have to also understand that, hey, you're putting $1 million. So 95,000 is really nothing to shout at. If you follow me to here, you're gearing towards the conclusion that 1.3% compounded annual growth rate is quite poor among all asset classes. And just nice now we have a very low interest, very investment heavy climate. If not, you could even be in losses. But we haven't factored in rent. And for this property, so this 2.25 million property, 3-bedroom Avenue South, I imagine net property rental income to be about $5,000. I think that's very fair. I thought very hard about it. You have conservancy charges and stuff. You minus off, I think 5,000 is a good ballpark figure. So you put 5,000, and TOP is going to be at 2023, somewhere around there. I imagine you manage to secure 2 leases of 2 years. But again, if you are new to property investing, you do need to know that it's very difficult to rent back to back. There's agent costs also. So this amount that I'm going to present to you is actually very realistic. Total rent you're going to collect is, with these 2 leases, possibly about $230,000. So net your total gains $325,107. If you follow to here, you kind of realize a lot of the gains are actually due to rent, correct? If you are able to rent it out. For a new property, yes, easy to rent. But again, there's a lot of data. Vacancy rate in Singapore is high. I have a previous video, I've done videos on properties before. Vacancy rate is high, competition is high. To get rent for so many months, Not that easy also. So do keep that in mind. Your rent is going to be a big component of your total return. If you don't like the prospects, not that easy. That goes to show, if your total gain is only 325,000 from such a big amount of investment, so much hassle, so much risk, I'm pretty sure if you put it into REITs, for example, as an asset class that's close, REITs of course don't invest in residential property, but if you put in REITs, likelihood you'll be better off. That's how I honestly feel. But again, that is using the 1.3% compound annual growth rate, buying at the wrong timing. But it's also not impossible because you buy from new developer, they could have marked it up already. So not that easy. But I do believe at this rate of return, you're better off into REITs. When we think about it, there is also another part I think is seldom mentioned also. When you collect rental income, it adds on to your personal income tax. If you don't know that, you have to do your homework. I'm renting out properly, so I do know, I declare income tax. That adds on to your income tax. If your income tax bracket is 100,000, 200,000 above that amount is going to tax quite a bit, 10%, something like that. It's not without cost. So also not factored in. So be very savvy when you try to calculate your returns. When you buy REITs, is one tier tax. Financial investments, one tier tax. When you buy the portfolios that are designed for you, is one tier tax. So very simple structure, not that much hassle. I'm also trying to give a balanced point of view. If you have followed through here, I'm not smashing that, we are only going to get 1.3%. I don't know. It's a very limited sample size. So now let's follow on the second part of the video, which is if we are going to get 3% compound annual growth rate. That is where it looks a bit better. That is where I actually thought of buying my own second property because that made sense. If we try to factor in 3% return, I'm going to give you numbers now. Follow me on this second part of the journey. So 2.25%, if you compound your property growth at 3%, your possible sales price will be 2.85 million, 285,032. Now, 2.85 million for an 8-year flat, possible, fantastic district. If circumstances play out well, greater water south front develops well, there is a possibility we can hit that. And same process, if you remove away our loan of 1,137,377, your total proceeds you'll get is 1,712,855. Same process, we remove away your capital, which is 637,100. You remove away your mortgage payments over the 8 years, 625,344. Your total gains from this investment is $450,411. This is actually where most property investors actually make money. When people buy PTO, they actually make big amounts of lump sum gains. When people buy their first condo built up many years back, they make lump sum gains. This is actually how it's done. Be very savvy about it. If you are new to investing, properties can make you big amounts of money. When you have leverage, you can get fantastic returns, 400 plus thousand. Very doable. I've seen a lot of case studies. I do planning a lot. Very, very straightforward and very doable. But because 3% compound annual growth rate. Actually, 3% for yesteryears is actually low. There were years which were way higher than 3%. So you can imagine how much money people made through properties. So if you're thinking how to grow rich in Singapore, property investment, nearly properly, you make yourself a big pile of money. And if you're sold a property, you don't quite know, how can I got this $500,000 gain? That's because compounded annual growth rate 3%. And it's only 3%. So if you've done a bigger number, congrats to you also. If you again factor in rent, 230,000, then your total gains of 680,411 could really materialize. Concluding things, because a lot of numbers thrown so far. Leave your questions, leave your comments below. I try to piece in as much information while also not overcomplicating the situation. Try to explain to you at the start if you followed me to here. Developers, do they actually raise the price? Yes and no. Then what kind of rates can we see in terms of performance? 1.3, 3, 4.6, doable? You have to think very carefully, be very savvy about the market cycle of property. Right now there is an oversupply, I think that's very clear. But will demand continue to surge? No one knows for sure. Because there is a lot of money printing, there is a lot of inflation, and people do move into properties, that is true. So hopefully I've given you a fantastic presentation. If I had $1 million today, would I be investing in property right now? My answer, personal answer is no. Why? Because I think we're closer to 1.3% than 3%. So I've given you a very rational point of view. If I believe we can get 3%, you bet I'll be into properties, I'll be buying something. I do have some cash, not impossible, but I've shown you my strategy. I lay it clear. You've seen how it's done. And with that, thank you for watching till here. Smash on like again. I'll see you in a future video. Take care and goodbye.